on now. Okay, are we good? Am I on? All right, I assume so. Assalamualaikum and good evening, everyone. Thank you for attending today's session. The title of our session today is Available Platform for Accredited Investors. With me today, we've got an accomplished panelist to discuss the topic of the day. That includes, by way of quick introduction, Sani Hamid. We've also got Suryana Safi'i, as well as Zul Faiz Ismail with us today. Without further ado, let me also just quickly introduce myself. So my name is Muhammad Shehzad. You can refer to me as Zad for short, and I will be the moderator for the day. This session is organized by Ethis jointly with IFSG. Yeah, so the Islamic Investment Festival, which is the event platform that we are on today, brings together a host of professionals from within the Islamic finance scene to give you, the attendees, the latest updates, insights, as well as answers when it comes to halal investment, not only within Singapore, but I guess across the region and to an extent globally. So today, just to reiterate again, the topic is available platforms for accredited investors. Now, this phrase accredited investor, I'm certain that almost everyone is quite acquainted with it. So typically, it refers to an investor with a special status under financial regulation laws. Of course, within each regulation, there is a different set of criteria or parameters or limits applied. Now, in Singapore itself, and I'm reading this off the HSBC site, which is taken off the MAS definition, Monetary Authority of Singapore definition for accredited investor. So for individual investor, this refers to someone who has an annual income of not less than 300,000 Singapore dollars or the equivalent foreign currency, or net personal assets exceeding 2 million, out of which the value of the investor's primary place of residence is limited up to 1 million. It means the excess of at least 1 million has to come from other source of asset. Let me just then very quickly circle back to Sunny. So to start things off, Sunny, your financial advisory firm, advisory, has actually been serving clients on both the accredited as well as retail level.
Yep.
Is it true that there are more investment opportunities then within the AI space? And if so, what makes these investments suitable or specified only for accredited investors?
Okay. Let me first start off by saying that if you're talking about quantity, then definitely the retail funds, the retail unit trusts far outweigh that of the accredited investor funds. It's probably a ratio of, I didn't do the exact numbers, but I won't be surprised if it's 5 to 1 or even higher than that. So basically, from that perspective, then retail, in terms of choices, you have many more choices. But the accredited investor funds typically bring with it a slightly different proposition. While there are certain accredited investor funds which look very much like retail mandates, i.e., we have an accredited investor fund which deals in ASEAN, has an ASEAN mandate, and you can also find that on the retail side. Okay, but there are also accredited investor funds which have very different propositions, i.e., for example, those that do certain strategies like long, short, arbitrage, high frequency trade. There are some which do private equity. There are some which have what we call black box models or quant models and such. So while it's smaller in nature in terms of quantity, the strategies that they use are very non-traditional strategies. And a lot of these strategies are what we call non-market correlated strategies. So the traditional markets are stocks and bonds, where you will make money if the market goes up and you lose money if the market comes down. But for the accredited investor funds, when you start dealing in all these kind of long, short, arbitrage, private equity and such, you'll find that sometimes the market comes down, you can still make money because basically that strategy allows you to do so. Okay. So I would say basically, just in a nutshell, that quantity-wise, the retail side has much, much more choices. But in terms of, for the lack of a better word, quality-wise, you will find that basically the AI space gives you a lot more flavor in terms of different strategies. You're muted, sorry.
This is the hazard of using Zoom. So just as a quick follow-on question, is it safe to say then that because of the risk exposure attached to AI funds and so on, that's a reason for the need to qualify and accept investors on their risk exposure basis?
Actually, you're right. To a large extent, that's correct. Because these kind of strategies is not easy for the layman, the retail individual investor to understand. How many of them do understand things like long, short, arbitrage, high frequency trade, private equities, VCs, stuff like that. Okay? So yes, true. I think what the regulations are there in order to ensure that it's only the sophisticated investors who invest in these type of funds. And by and large, those investors with very large amount of net worth, high amount of net worth, are typically speaking sophisticated enough. Having said that, there are also basically, like I mentioned, certain funds which are very straightforward, but it's just because they don't want to go through the so-called inverted commas hassle of launching a retail fund. And to them, institutional money is fine. I'm happy with that. I don't need to go to the retail market. So they just don't bother to go down that retail route and get registered under the retail route. And they're happy to stay in the so-called accredited investment space, despite the fact that their mandate is quite a simple mandate. So sometimes it's a choice of the fund itself.
Thank you, Sunny. That is an interesting sharing that you have, and which basically brings a segue to Suri. So your fund is open to retail investors with a minimum investment size of 20,000. Yeah. Now, as you would agree, and I think most of us would concur with this, fund houses need investment capital to continue running. And that's the whole purpose of the existence. As lowering the amount of investment requirement then avail you to more retail investors. Is this in your favor? Sorry, are you there? Am I audible? Okay, I think maybe there's some technical issue. Let
The
us round back.
organizer may be able to unmute her, I think.
Yeah, I think it's okay. Let us round back to Suri in a while. Let's move on to Zul. Now, as the relationship manager, you meet different kinds of accredited investors. What kind of questions do they ask you before investing? And are all AI the same? Perhaps you can touch a bit on the KYC that you go through in order to qualify them as AIs.
Sure. I think we will start with Adria. Thank you personally. Thank you so much for inviting me to the festival. I think this is a good opportunity for everyone to come in and share ideas. So back to the question, right? Are all AI investors the same? I think there are no two investors that are the same, right? Not just on the AI level, but I believe every investor is different and unique, right? Factors of financial goals, investment horizon, risk appetite, portfolio mix, and probably another 147 other things that differentiate one investor from another, be it AI or not. But one thing I could share that would probably resonate with most investors is that with the current uncertainty in the market and the downside risk, if there is a product with relatively, principal protection, fixed returns, in excess of inflation, I think it would be a compelling option for most investors, right? Regarding the first question you asked regarding the difference in questions that they ask, I think the comparison isn't between AI and non-AI, but rather the kind of investors I think that exist today will usually fall into one out of two categories, right? So that's the typical investor and the more savvy ones. So I think broadly speaking, the typical investors will usually pose more product-centric questions, right? Things like, what is the returns? What's the tenure? What's the exit strategy? What's the minimum investment amount? And don't get me wrong, these are essential questions, but the focus is typically different, right? The savvy ones will evaluate each investment in the context of their own overall portfolio, right? So when I sit down with the more savvy ones, it's more of a needs-based problem-solving kind of conversation, right? There are likely people who have a more diversified portfolio. They could have traditional asset classes in one part of their portfolio, and the other part have private asset classes. Even they have maybe cryptocurrencies with it. So we will share with them what are the headwinds. In the same time, we will look or assess where their biggest tilts are, right? What is their main risk driver? What's their asset allocation goal? And how should we change moving forward? Yeah. So I think generally as RMs, we are always eager to close a deal, right? But one of the things that I've learned in Aurus Capital, at least, which has served me in good stead, it's that we don't close a sale here, right? We open a relationship. At the end of the day, I think people should never feel like they've been closed. They should rather feel like they've become a part of something, bigger part of something that makes a difference. So in Aurus, at least what we do is we try to make institutional grade investments that used to be only accessible to the ultra high net worth and insti investors. Now we aim to make these same products accessible and affordable to investors like you and me. The third question, I think, if you went into the KYC a little bit, I think in most cases, regarding the KYC, so we do use the three parameters, right, to ensure that they are AI investors. I think there's no flexibility on that. Generally, we will ask for their income statement. We will ask for their ownership of property to ensure that they are actually AI before they invest into the fund. So those are typically the kind of KYC that we do. Make sure that it's a non-money laundering account. We make sure that even the bank account that they have is a KYC account, and then they invest into us. And then when we give them back the returns or their principal, it should be back into the same account, because if it's onto a different account, then there'll be AML issues over there. So I hope that answers the question.
Thank you, Zul. Thank you. And I think you've touched on actually the nerve of the issue here in terms of dealing with investors. And I like the phrase that you coined, rather than close the sales, you're opening relationships. And I echo that for us at Ethis, we basically see the platform as opening opportunities or giving accessibility to investors as well as those that require funding. Madam Suri, are you okay?
Yes. So sorry, just now there's something wrong with my audio, so I can't hear you all.
Okay.
Sorry.
Let me just quickly recap the question.
Yes.
So Sunny mentioned about the risk return profile and all that, and the accreditation or the requirement to accredit an investor is really driven by the need to give some level of protection. One way that I think can actually be used to enhance the protection is to offer a smaller ticket size. Now, this is something that you have done at Walton as well. So this minimum investment of 20,000 that Walton has said. How does that open you to more retail investors?
Okay. Assalamualaikum, brothers, Shehzad, Zulfai, Sunny, and everyone. Alhamdulillah, thank you very much to Ethis, firstly, and IFSG for this opportunity. Indeed, investment capital is a key factor to sustainability of a company. Our AI clients definitely played a major role in our business. However, we will not be where we are today if not because of our retail investors. Because you know why? Walton has been around for more than 40 years in this pre-development land investment industry. Alhamdulillah, I've been serving retail AI for 19 years and Alhamdulillah counting. Has lowering the minimum investment requirement and opening it to retail investors worked in our favors? Definitely yes. Simply because when I first joined, I just give you an example, yeah. When I first joined Walton, I actually approached a good friend of mine who's an engineer, and he's not an AI. The first time when I shared with him, he brought along his friends, you know, and just to actually create more awareness of this particular product. So end up his friends are the ones who invested, but he couldn't because his wife, at that time was pregnant with their first child. About a year later, he came back to me and asked, do you still have that motivational talk? Then I said, well, if you find that wealth creation is a motivator to you, then I said, yes, we still have it. So he and his wife invested in 2004 in their first project. They continued to build their portfolio over the years. Then fast forward 2013, around that, 10 years later, their funds actually went from 40,000 to 80,000, okay, almost double. They took some to pay off their mortgage, home mortgage, and reinvest some to let it grow in the US market. They have actually been my Walton ambassadors and helped to create awareness about our opportunities to his family and friends. And this is one of the many retail client stories that we have in our Walton journey. So when we open the opportunities to retail investors, the sales may not be as big as the AI investors, but the sheer volume in the number of retail investors resulted from the referrals and mainly from the word of mouth. It's really tremendous. So most importantly, it allows more Muslim communities, especially in our current market now, to be aware that there's such investment vehicle that is land-based, Sharia compliant, and mainly is affordable. So would I suggest the same for other investment house serving AI clients? I think to a certain extent, yes, I would suggest them to try it out, to consider lowering down. This is just to allow them to participate and slowly build their golden retirement nest. So this is an option. Yeah.
Thank you. Thank you. I think, yeah. So that experience that Walton has is definitely something that is helpful, perhaps in also getting the regulators to perhaps reconsider or tweak, the parameters that is applied in terms of accredited investment only clientele. So related to that, Sunny, we understand that your firm has investment opportunities that are only and specifically for AI investors. We understand that you have a private equity fund as well as some mutual funds, which are such. Would you be able to share and elaborate a bit more on that?
Okay. So basically, we have access to so-called AI funds via two main routes. The first route is basically through platforms. You've probably heard of platforms called Ethis and such. So Ethis basically has two platforms, one for retail investors and another one for high net worth individuals. So they would put all of their AI funds into the so-called high net worth platform, so to say. Under that high net worth platform, you will find certain accredited investor funds. And there are also Sharia accredited investor funds. Just to give you a flavor, there is basically a global sukuk fund inside, which is accredited for accredited investors. There is an ASEAN fund, which is an accredited investor fund. Those are mainly more straightforward type of investments. There's another one which is based on what we call quant model. So there is one Sharia compliant fund in there, which is using a quant model to actually dictate its buy and sell and such, and it's available there. So those roughly about 5, 6 among a universe of maybe I think 50 or odd are Sharia compliant. The other route that is available to obtain Sharia compliant funds is the direct route. And this is where we as a company would tie up directly with funds that are here in Singapore that offer both Sharia and non-Sharia compliant products or solutions. Okay, so that direct route is sometimes, most of the times, we will seek out funds which we feel are suitable, which are in terms of risk, in terms of return, in terms of mandate, and then make those funds available to our clients. So at this particular point, in Financial Alliance, we have one Sharia compliant fund which is on this direct route, and about 3 others which are the so-called 3 other conventional funds which are under this direct route.
Thank you. Just as a follow-on question, I think it's implicitly understood that the funds that you deal with are also licensed, whether by MES and so on. For foreign registered funds, is there an additional measure of qualification that you have to do or something before they are onboarded onto your firm's platform?
So basically, the most important thing is basically for these funds to either themselves or through another vehicle to have what we call a CMS license, or to be tied to someone who has a CMS license. So if you're on the platform, basically the platform hosts the so-called capital market license, and all of the funds that we deal with directly, they are tied to companies which carry the CMS license. So just give you an example. There is this particular digital asset fund from Australia who registered itself to be distributed in Singapore. But what it did was basically it tied up with basically a company which has this particular capital market license. And so it is now being distributed or sold under this particular company which has a capital market license. So for us as financial advisors, we are then able to actually distribute and offer this fund to our clients because it falls under a particular license available here locally.
Thank you. So in a nutshell, whatever funds that is available on your platform, it has to be routed back into the MES regulation regime.
Any funds that distributed, yes, any fund that's distributed here in Singapore will have to be regulated. In fact, for us, people like us who are financial advisors, we can only deal with regulated entities and regulated products. So I think quite simply put, if it's non-regulated, we are unable to distribute that product to our clients.
That is very clear. Moving on, Zul, your firm is about to launch the first Sharia compliant hedge fund directly in Singapore. Could you share with us a bit more about this fund, as well as hedge funds itself, and how differently do they work?
Okay. Yeah, I think this is one of the most questions I enjoyed the most, to talk a little bit about hedge funds, right? So I think hedge funds differ from each other, and it could be down to various factors, such as investment mandates, strategies, asset classes, or even regions that they operate in. More often than not, they are only available to AI and institutional investors. I think because that the underlying strategies tend to be more complex, I think as said by Brother Sani, or targeted as compared to ETFs or normal unit trust, right? So a lot of hedge funds also have liquidity clauses where investors' capitals are locked up for a pre-specified horizon, because generally there's no ready secondary market for hedge fund products. So in Aurus, however, what we're trying to do is we're trying to build sufficient product breadth across all the major asset classes, right? And in the same times having a total portfolio management as a service, which essentially meant that we will take care of asset allocation, be it strategic or tactical allocation, be it core or satellite, as well as rebalancing of capital across the public and private market. So that's a little bit about Orzala, all right? So for the fund that we are converting in Sharia compliant, so basically, if I could share a little bit, so it's a private credit fund, right? That works like a bond a little bit. So investors can choose to invest either 2 years or 3 years note that pay roughly 9-10% in returns per annum. Investors' capital is locked up for the duration of the note, and they get their principal back at maturity. So the returns are higher than the current inflation rate. And also you may, if you look at the other alternatives, right, you may get around maybe 5 to 6% dividend in REITs, right, in listed REITs, but there is downside risk in there. But with our notes, we give back your full principal, which means technically there's no downside risk, right? So that's a little bit about the Sharia fund that we are trying to convert. So the fund actually has already existed, is already running right now. So I took the initiative. So I thought that this is a great product that I want to be available to the Muslim market as well. So we are doing the conversion process, and Alhamdulillah, we have get the agreeable of the board of the advisory firm they're working with, and they said that it's good to go. With some parts that are still in question, but pretty much, yeah, it's good to go. Yep.
That is amazing, because I think the trending topic among investors today is actually inflation. So 9 to 10% returns is definitely inflation beating. And I think the downside risk is predicated by the guarantee that is in place. I'm sure investors would want to know more, but that is an interesting starting point. Now turning to Suri, owning land has always been, I think, since perhaps time immemorial, owning land has always been a form of investment, yeah, for Muslims or non-Muslims alike. Now, for Muslims, I think in Singapore, the skyrocketing cost of real estate makes it perhaps a bit out of reach. We are talking about GCBs being sold for tens or even, I think in one case I heard more than 100 million. Specifically for Walton, how do you then make it available or more accessible to investors? And how is it different from simply buying a piece of land? Sorry, Suri, you're muted. No.
Can you hear me?
Yes. You're good now.
Okay.
But there is an echo, it seems.
There's an echo, yeah.
No. I think this is the wonder of technology. Sorry, we can't hear you again. When you killed off the echo, we lost you again. Okay, I think it's fine. Maybe I'll circle back to you. Let me move on to Sunny again. So Sunny, as you mentioned, out of a universe of 50 or so investment opportunities, you mentioned that only a handful is available to Sharia compliant investors. So basically, we are grateful that availability is made through your platform. Now, if we are to increase.
Hello.
Yes,
we can hear you now.
We can hear you now. Okay, Suri, I'll circle back to
Hello.
you. Yes.
Yes, can
We
you
can
hear us?
you now.
Hello. Speaker.
We can hear you.
Hello, can you hear me?
Yes.
Yes, we can hear you. Oops.
If you're good to go, I'll continue with you. Otherwise, I'll
I think the
circle back.
organizers maybe try and get her to use her phone for audio, and then this one just for visual. Yeah.
Okay, let me
We'll
continue
just
first.
continue. Yeah.
Yeah,
Please go ahead.
sure. So what kind of asset classes or investment types do you foresee being added to that currently available space of Sharia compliant AI investments?
Okay. Well, I think what Areas Capital has is very interesting. It's again, you very seldom hear of Sharia compliant hedge funds, and this basically again, it narrows down to the so-called inverted commas credit side of it, which I think is a good addition to the whole thing. What we have currently is private equity, which is Sharia compliant. It's basically investing in a particular company in the UK, which deals with very highly specialized healthcare, patients with mental issues, spinal injury, brain injury, and so on and so forth. It's akin to basically, if I can't really think of an example here in Singapore, but you can just imagine certain clinics and certain institutions here which deal in these kind of very specialized healthcare. All of these are private sector institutions. Imagine if you could invest in them. And that's what this fund does. This fund allows, it collects capital from individuals, takes that capital and invests in these kind of entities, as I mentioned earlier. And that's why it's called private equity. It's not listed in the stock market. It's basically a private limited or Sendirian Berhad, so to say. And because it's one of the largest in the UK, it's what we call a cash cow. It provides basically, it's a running business, profit. These things, you know, is profitable. It gives you money every month. So on average, it provides roughly between 10 to 20% per annum. And historically, over the past 4 years, that's been the track record, with very minimal volatility. I think out of the 100 months that we've seen so far in terms of past performance, there's only about 6 or 7 months where you see a small decline, and those declines are less than 50 basis points. We only had one which was higher than 1% in one particular month, and that was because the UK raised its so-called minimum wage. But again, like I mentioned, so these are quite unique, and I think that's our flagship fund, so to say. A very good return, very predictable return. In this particular case, the government and insurance company pays for the patient's stay, so to say. So at no point is there basically a risk of default because the government doesn't default and insurance companies don't default. So that's a really good fund for us, and we have quite a lot of investors invested in it. The so-called wish list is basically right now we have a conventional fund, and I'm just going to tell you about a conventional fund because what I would like to have is a Sharia version of this. We have a conventional fund which basically is a digital asset fund. It invests basically in cryptocurrencies. However, it doesn't just go straight into cryptocurrencies. It goes into different funds. So it's what we call a fund of funds. Different funds with different strategies, long, short, arbitrage, high frequency, and so on and so forth. Okay. What it intends to do is to capture 2/3 of the crypto market's upside and 1/3 of its downside. So you have a situation where, for example, last year, I think the crypto market did overall 100% and maybe even 200%. This fund went up about 80%. So not bad, 2/3 of the upside. This year, crypto markets have just been decimated. Crypto funds are down like basically 80-90%. This fund is down less than 20%. So you have that. So this is the so-called, for lack of a better word, the beauty of hedge funds. They can carve out their strategy to this kind of extent, capture 2/3 of the upside, manage risk so that it captures only 1/3 of the downside. Yeah, and we felt this fund was really one of the better ways for our clients to tiptoe into the crypto market, which is just so highly volatile. We didn't want to take the full extent of the downside risk. we were willing to give up some upside risk, but of course we wanted as much as possible. So it gave us really a very good opportunity, and a lot of clients like this one. So if we had a Sharia version of this, and of course this goes beyond that debate of whether crypto is compliant or not. But if we had a Sharia version of this, I think that would be very, very good.
Thank you, Sunny. So you phrased two very pertinent points. Number one, in terms of the capability of the asset manager or the fund manager themselves. Within the crowdfunding space, which I'd like to term as basically giving investors a chance to dip into the private markets directly, the level of due diligence is not as extensive as that of managed funds, but the way that risk is hedged is by the smallish kind of investment ticket or size of investment needed for investors to dip their toes. Secondly, in terms of giving access to accredited funds, we are also looking at a mechanism where retail investors can be pooled together into an SPV, and then this SPV becomes an investor into funds. This is something that we are in discussion with a number of entities. And perhaps this is our contribution towards giving accessibility into potential lucrative investments such as that which we have just highlighted. So, but I concur with the observation that we need to have more, I guess, availability of such funds in the sense that investors are given control of that risk tolerance matter. Suri, are you good to circle back?
Yes. So sorry about just now. Adoy.
It's okay.
So
it's okay.
everybody can hear me now?
Yes. Would you like me to recap the question again?
Oh, yes, please. Thank you.
Okay. No, so I was just saying earlier that investing in real estate is something that people have been doing for the longest time. Now, in Singapore itself, I think the skyrocketing cost of real estate may be a bit more prohibitive for a number of us. I mean, even GCBs have gone past the 100 million mark.
Oh, yes.
Yeah. So how does Walton then give access to investors who are interested in real estate,
Okay.
aside from just simply buying a piece of land?
Okay. All right. Thanks, Brother Shizat. Okay, I just give you some intro. For information, today we manage about 98,000 acres of land, which is about equivalent to more than half of Singapore size. And we have over 95,000 clients worldwide. So what makes us different, in terms of just simply to just buying raw piece of land, right, is the traditional way is actually to buy, like what you have mentioned earlier, in a form of the price is very, very, very expensive, right? However, Walton make it more affordable for especially retailers, and it comes in the form of undivided interest. When we talk about undivided interest, meaning we actually divided the plot, to in the form of for example, I give an example, 100 acres, we subdivide it to about 1,000 units. So the clients are able to actually own in the form of one unit equivalent to 1 out of 1,000 interest of ownership. And if they are coming in 2 units, they are coming in as 20,000, form of investment, which you have actually asked me earlier, right? The first question. So our core business is investing in the right land, but we have to look at how, in the first place, how do we understand? We have to look at the real estate life cycle. Like, I just give you an example, in Singapore, the closer to us is actually Punggol, correct? Last time, Punggol used to be the oldest settlement in Singapore, and they are actually more towards farmhouses, farm structures, service roads and dirt tracks, right? From raw agricultural land, now look at how Punggol has transformed. The Punggol 21 Plus plan that the government has introduced to redevelop the area into a waterfront town, yeah? And the price, of course, the initial raw land has increased from the entitlement, and the zoning status has changed, has definitely increased. So when what kind of the difference that we compared to the rest of just simply buying a land is actually when we do our thorough due diligence before buying the pre-development land investments in the path of growth. And then what else do? We get the approval from the relevant authorities to rezone and convert them to service lots. Then these service lots parcels will then be marketed to home builders who will buy them to develop. And then eventually turn them into communities. So again, the difference is when you come into Walton is, firstly, we have vested interest on each particular project that we picked. For example, if you run a business which has many projects under your wings, and in each project you have a share, definitely you'd want to do your best to ensure that each project perform well, correct? So with this vested interest, our clients has the assurance that Walton will do our best to get the best returns for their clients and also for ourselves. And of course, over the years, I think you believe you agree with us, with me, that there is no perfect investment. Have we made mistakes? Yes, of course, over the 43 years that we have been around. So what do we do about that? So because we are in the same boat with our client, to recover that mistake, we actually prepared a recovery plan. Our investors can divert their investment with a special curated project, and we help them to leverage their overall returns. In fact, this move was very much appreciated by most of our clients. They actually commented among their investment baskets, only Walton offered such recovery plan. And this is something that I just want to highlight. The biggest difference we have is because of our integrity and the skills in managing and selecting the projects, we are now actually invited by the top 30 largest public listed home builders in the US to be their partners. This one I will share with you a little bit in detail later. What the important things of investing land with Walton, the benefits. First thing is transparent. Okay, identify land use and buyer right from the start. And it's a tangible asset, real estate with freehold and land ownership. And the security is there because each investor will get recorded deed with title insurance. And of course, it's low maintenance, almost hassle-free because Walton helped to manage the project, right, for the clients. And another thing that a lot of clients like, because we have a legacy for them where they can appoint an administrator to manage the land investment upon the owners passing on. So in summary, with Walton, investors are not just simply investing in land, but they are also a part of the contributors towards future communities. And of course, with the Ethis Sharia compliant product, and also with returns about 13 to 70% IRR, we have actually, get this product initially from the previous one from our Pergas, then our current one is by Amani Advisors. So basically, we actually help to create a potential opportunity for, instead of coming in the traditional way, we actually help them to come in a form of undivided interest, a smaller portion. Yeah. Mm-hmm. So of course, the AI will have to, when they come in, they come according to their capacities. Yeah.
Sure. So basically, I think Walton has practiced or implemented fractionalization, which is a current trend within the blockchain space and all that. Basically, it simply means carving up assets. The blockchain enables the registration of interest to be clear and undisputed. So you have been doing this since before it became trending. The other thing is, I think I echo the sentiment that most of us have, with regards to the ones managing funds also investing with the investor. I think that
Yes.
that is something, yeah. I think within the investment space, the jargon is having skin in the game. So that is
Yes.
something that Ethis itself is looking into with the
Yeah.
launch of
Interest.
our
Yeah.
with the launch of our own Ethis fund. So as a crowdfunding platform, we merely match make investors with investment opportunities. Under Ethis fund, we will actively invest into the campaigns that we have on our platforms as well. But this is done as a licensed fund manager.
That's good.
The Zul, can I move on to you?
Sure,
Okay.
sure, inshallah.
Okay. So in terms of becoming Sharia compliant, you mentioned that it's a conventional fund that you have now. It's in the process of being converted into being Sharia compliant. Could you share that whole process so that the rest of us have a sense of the intricacies or the difficulty of getting this done?
Okay. Okay, good question. I think there are, a few processes involved, right? But let me take a shot at one of the major ones. Okay, so one of the most important question that I think a hedge fund must ask themselves, before doing the conversion is, which region of clientele are they targeting, right? Because if you were to go to any Sharia advisory firm, and there's a lot, right, for certification, this is one of the first few questions that they would ask, because with different region comes different interpretations, and with different interpretations of Sharia comes different structure that's needed for the investment, right? So with different structure of the investment, then comes with them different risks and returns, not only for the investors, but for the fund managers as well, right? So for example, I think there's a question there about there are different funds or Sharia compliant funds that they're looking for, right? One of them would be like Sabana REIT. I think previously they were Sharia compliant. I think they were using 5 pillars as their Sharia advisor previously, which was headed by Mr. Raj. One of other companies like ValueMax, engages with Ustaz Kamal Mokhtar, and the popular Franklin Templeton, and I think with Walton as well, they uses Armani Advisory. So I think different fund has different mandates, and they need to have a sit down with these firms and iron out the details so you'll find the right one that matches not only the mandates, but if they share your vision, then I think that's a deal maker as well. So for me personally, I've had a sit down with at least 7 firms, before arriving to the right one. I'm not sure if you're able to disclose the firm yet, but it is one of the firms that I mentioned earlier. So that's a guess there. So we are definitely excited and pleased to share that we have, again, received positive feedback with their board and their agreement to make the fund Sharia compliant. Yeah, and if you're looking to the retail side, we are working with some people, in this particular webinar as well to make that happen. So hopefully that we can have, more platform for people to invest into the fund. Yeah.
I think sharing the experience that Ethis had in terms of getting our Malaysian crowdfunding platform being certified as Sharia compliant. I always liken it to, for example, a restaurant. So in a restaurant, you've got those who offer, for example, no pork, no lard arrangement where, okay, it's you take it in good faith that there's no haram food stuff being sold. But there are those who take the extra step of getting certified. So for Ethis itself, when we launched Ethis Malaysia, that process of getting certified by Islamic Capital Markets, which is the Sharia supervisory unit within SC, Securities Commission Malaysia, that is a lengthy process that we have to go through. And because I was directly involved in that process, I am fully aware of the requirements and so on. So I can, I think, surmise by saying that, Zul, I understand what you're going through. And this is the cost of trying to, I guess, make investments which are Sharia compliant, certified Sharia compliant, more accessible for Muslims. But I can assure you that it's a well worth effort that you will see, whether you reap in terms of commercial gains or other worldly gains, inshallah. I think we have to move on to our Q&A, but before we move on, just a final remark from Sunny. So Sunny is the part of the largest independent financial advisory firm in Singapore. What more do you hope or wish to see? Number one, in terms of availability of halal investment overall, whether for retail as well as AI, and specifically within the AI space.
Well, in general, of course, more Sharia compliant funds, whether it's retail or AI. But at the same time, it's a supply and demand equation. We can come up with the supply, but at the same time, there has to be demand. So, so another wish is actually for the Muslim community to educate themselves as to the need for Sharia funds, as to the need of getting away from riba, and so on. And I think when that happens, it becomes easier for us when we meet asset management companies, for example, and we say that we like your fund. Do you have a Sharia version? If you don't have, maybe we want to consider to make it Sharia. Because guess what? There is this demand here in Singapore, even though we only have 500,000 Muslims, the demand is there at least to support one such fund. So it's both ways, and that would be my wish list to have it. I mean, just to add on very quickly also, the healthcare fund, which I spoke about earlier on, it actually started out as a conventional fund. So when Zul mentioned about him converting a conventional fund into a Sharia fund, it was exactly the same. So it started out as a conventional healthcare fund investing in specialist healthcare. We looked at it. We have some experience with regards to Sharia fund. We looked at it. Our initial impression was it should be Sharia compliant. We brought it over to ISRA in Malaysia. ISRA did the initial filtering, came out and came with the conclusion that it is Sharia compliant. So basically, I think part of the responsibility also lies on our shoulders when we see certain conventional funds, which we think is able to actually be converted to Sharia. Yeah, so we will do it. But at the same time, like I mentioned, there needs to be demand also.
Thank you, Sunny. I think we've come to the end of our session. Before we move on to our Q&A, I did not introduce our panelists as such, so I'll just take a bit of time to just quickly run through the panelists that we have today. So Sunny basically holds the position of Director, Economy and Market Strategy in Financial Alliance, which, as mentioned earlier, is the largest, one of the largest financial advisory firm in Singapore. He also heads Financial Alliance Islamic Wealth Advisory, or FIWA division within Financial Alliance. Exceptionally well-experienced investment professional, having 23 years of experience with various entities such as S&P, MMS, BNP Paribas, S&P Ratings, and experience across geographical markets like Indonesia, India, Malaysia, and Singapore. Sunny holds a Bachelor in Business from NTU, as well as a Master's in Social Science in Applied Economics from NUS, and is a certified financial planner. Zul is a relationship manager for high net worth. He was previously with DBS Bank before joining his current firm, Horus Capital. Zul is a member of Horus Capital's structuring team. So basically, he is part of the team that looks at how to firstly come up with the returns and so on, but also has the task of introducing Sharia solution products for the market, specifically for accredited investors. As he shared earlier, I think Horus is looking to try and see if this opportunity, which has been traditionally reserved only for accredited investors, will be made available also to retail investors. Zul is an accomplished public speaker. He has won a number of competitions and was a finalist in a recent debate competition. Suri has about 2 decades of investment sales experience. She is currently the Vice President of Sales at Walton Singapore, which is a North American-led asset management company managing over 3.4 billion worth of real estate assets in Canada as well as the US on behalf of investors from more than 71 countries. Besides being a portfolio manager, an investor, Suri also partners with local and overseas independent financial advisors with a special focus on making Sharia compliant products more accessible to Muslims worldwide. With that, I think we can move on to the Q&A. Let me start off by sharing 2 questions that has been submitted. So firstly, the first question is, what are the Sharia compliant AI funds in Singapore? I think this can be a lengthy answer. Perhaps in the interest of time, can I request maybe Sunny to reel off maybe typical 5 funds or 10 funds that's available to AI investors?
Okay. So again, if you go to Ethis and you go to their so-called high net worth platform, you will be able to find some of these funds. Number one, you'll find a global sukuk fund. You'll find a ASEAN fund. You'll find a quant-driven fund. 3 of this. If you actually come over to our site, we will be able to offer the private equity fund, which is Sharia compliant. Okay. On the retail side, of course, there will be others. There will be some equity funds, some sukuk funds. There is even a gold fund, which is Sharia compliant on the retail side. Yeah, so roughly about 5 funds. That's basically accredited investor, 3 on the platform, 1 my side, maybe Zoe side, another 1. So you, there probably is more, and please do inform me if there are others that you come across.
Thank you, Sunny. Next question is something very close to my heart. In fact, the question asks, if I don't qualify for AI status, is there a way for me to invest in a Sharia compliant AI fund? Perhaps Zul as well as Suri, you want to tackle this. And I hope the answer that you give will illuminate the path for retail investors as well. Maybe Zul, you'd like to have a step first?
Okay, so let me take a shot at it as the best that I can. If using rules and regulations, right, by right, retail investors aren't allowed to invest in AI funds, be it Sharia or not. However, structurally, there are ways we can try to circumvent this in a sense where, like for me personally, we are trying to work. I think I can just disclose, right? We're working with a platform called Ethis, which is headed by Brother Shehzad over there, where they actually have a platform to crowdfund using retail investor to crowdfund into a pool of some, put it into an SPV, which is called a special purpose vehicle. And from that SPV, they will then subscribe into the AI fund. So that is one way which we're still trying to structure things out. But inshallah, if everything goes well, then that's definitely a path where we can actually bring an AI compliant fund downwards for the retails. Yeah, so that's the answer on my side.
Thank you, Zul. And maybe from Suri, perhaps, I think the whole issue or the whole setup with accredited investment is to limit the exposure, the risk. So one way that Walton has effectively done this is to limit, for example, the ticket size. So instead of having a ticket size of typically 200, 250,000 USD, we've gone to 20,000. Is there any other way that you think we can mitigate the risk and basically give sort of access for non-AIs, i.e. retail, into AI funds?
Actually, very upfront,
$20,000 US is actually the minimum that we can actually go. We can't go even lower because we are, okay, I mean, in the past, with the past strategy, we actually went to 10,000 US dollars. We did. But over the number of years that we have done that, we realized that it doesn't make sense. Because why? The cost of exit that actually incurred towards the end of it, it actually, unless the returns of the price offered is more than triple or 4 times, then it makes sense. But if it's just a double, then you will definitely have a very little meat there. So that's the reason why for us, we have changed it to minimum at least 20,000. And that is considered the best for, and the best opportunity for the retail investors to come in. And we actually, with that, we actually help them to be motivated, to be an AI in the future. So at least there is an avenue for us in that area. Yeah.
Shama. So just to extend the response that you have given, I think Ethis is trying to do its part as well. And this is where enabling investments at levels such as 1,000 or even sub 1,000 for each investor. This is our contribution towards enhancing accessibility. But I do agree with you in terms of cost. So cost not only comes from the cost of operations in terms of, for example, the investor relations team and so on, but also cost of compliance. Because although we are not per se a holder of a capital markets license in Singapore, but our platforms are regulated in Malaysia, in Oman, as well as in Indonesia. So we do have some cost of compliance. Now, the way that we are trying to manage our own cost of operation is to automate and digitize everything that we have. So yeah, I hope we are contributing towards the ecosystem and especially enabling bigger, better, and more fruitful access for investors, not only accredited but also retail.
Inshallah.
So with that, I thank all our panelists today, and as well as our attendees. Thank you for making time today. Now, our next or last webinar will happen this Saturday. You can register at the link that our event organizer will share shortly. So I hope to see all of you at the next session this Saturday. Thank you, and Assalamualaikum warahmatullahi wabarakatuh, everyone.
Salam. Thank you very much.
Thank you.
Yay, well done.
Okay.
I think it's good. I mean,
I guess someone talking, but I don't know who. Okay. So Zul, looks like we've actually built up this expectation that we're going to do something.
Yes, definitely. We definitely have to do something about this.
So yeah, I think with Ethis X, yeah, one of the unique things about the guideline is they have been silent on onward investment that we raise. So in Malaysia, a clause from SC clearly says you can't make an investment after the issuer has raised. That means whatever that the issuer raised has to be for its own use. But in Oman, they are silent and they are also engaging CMA. But yeah, let's make this happen because it can give people a lot more opportunities and access.
Definitely. I think it's definitely the way to go. The fund has always been open to only institutional grade or rather ultra high net worth or insti investors. So if we can bring this particular quality of investment downwards to retail, I think it's a game changer. So